South Africans are buying less on credit. Reserve Bank data shows private sector credit demand slowed to 8.7% year-on-year in February compared to 9.15% in January. Now, economists say the moderation is mainly due to slowing corporate lending.
Borrowing by South African companies has slowed down. It's believed borrowing has been driven by companies expanding into the rest of Africa. In February, corporate credit raised 14.5% year-on-year, outpacing household credit growth of 3.3% year-on-year. Economists say this is consistent with the relatively tighter credit standards imposed on households compared to corporates.
We believe that this is borrowing by South African companies has slowed down, and we suspect that this is borrowing for investment for the rest of Africa, which has been driving corporate lending for quite some time. So corporate lending, which is a big part of private sector credit extension, when that slows down, it tends to drag growth in public sector credit extension lower.
Households are also signing up less on credit. Lenders are being cautious in extending credit, while consumers are still under financial pressure. Mortgages have been slowing down, and extended credit is mostly short-term.
Prices started falling. We thought that this is good because it will give consumers more money, so we'll start seeing an increase in disposable income. That did happen, but it was very short-lived because the budget then reversed the reprieve that consumers had when we announced, there was announcement of increases in fuel prices, increases in personal income tax, and obviously the increases in electricity prices that are going to come into effect on the 1st of July. So these increases are reversing the benefits that consumers had from falling petrol prices.
It's expected that the slowdown in household borrowing will continue due to the health of consumers, while corporate borrowing will be driven by opportunities to invest. SABC News, Johannesburg.